Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel at the rate Accounting Buddy NB. In today's video, we are diving deep into modern classification of accounts and how it is used to record common business transactions. From capital introduction, bank deposits and loans to purchasing assets in cash or credit. We will cover it all with clear journal entries. We will walk through goods purchased and sold, cash and check transactions, loan interest, business travel, advance payments, and settlement with creditors and customers. We will cover it all. Whether you are a beginner or brushing up your accounting knowledge, this video will give you a solid foundation in journalizing transactions the modern way. So relax, grab a seat, and watch the full video. Let us quickly have a recap of the rules of debit and credit. First, based on traditional classification of accounts, accounts are classified into personal accounts, real accounts, and nominal accounts. And the rules of debit and credit for personal account is debit the receiver and credit the giver. Rule of debit and credit for real account is debit what comes in and credit what goes out. And rule for debit and credit for nominal account is debit all expenses and losses and credit all incomes and gains. Now, under modern classification of accounts, accounts are classified into asset accounts, liability accounts, capital accounts, revenue accounts, and expense accounts. Assets and expense accounts are debited when they increase, while asset and expense accounts are credited when they decrease. Liability accounts, capital accounts, and revenue accounts are credited when they increase, and while these accounts are debited when they decrease. We have discussed both traditional classification and modern classification of accounts and their related debit and credit rules in our previous chapter also. Another illustration on your screen is analyze the transaction, state the nature of accounts and the account that will be debited and credited as per modern classification of accounts. Transaction T20 on your screen is Tully started business with a capital introduced in cash amounting to $50,000. The two accounts which are getting affected are the cash account and the capital account. Under modern classification of accounts, cash is an asset and the rule for debiting an asset account is debit when assets increase. Capital introduced is recorded in the capital account and the rule for crediting capital account is credit when capital increases. Therefore, this business transaction is recorded for $50,000 by debiting cash account and crediting capital account. Transaction T21 is a bank account is opened by depositing cash amounting to $20,000. The two accounts which are affected by this transaction are bank account and cash account. Under modern classification of accounts, both cash and bank account are assets. The rule of debit and credit is debit when assets increase and credit when assets decrease. Therefore, this business transaction is recorded for $20,000 by debiting bank account and crediting cash account. Transaction T22 is business received a loan of $10,000 from Polly by check. The two accounts which are getting affected are bank account and loan from Polly account. Under modern classification of accounts, bank is an asset while loan from Polly is a liability. An asset account is debited when it increases and liability account is credited when it increases. Therefore, this business transaction is recorded for $10,000 by debiting bank account and crediting Polly's loan account. Next illustration on your screen is analyze the transactions, state the nature of account and the accounts that will be debited and credited as per modern classification of accounts. Transaction T23 is business purchased furniture in cash from Homebox LLC for $2,000. The two accounts which are getting affected are furniture account and cash account. Under modern classification of accounts, both furniture and cash are asset accounts. The rule of debit and credit for asset account is debit when assets increases and credit when assets decreases. Therefore, this transaction is recorded for $2000 by debiting furniture account and crediting cash account. Transaction T24 is business purchased furniture for $5,000 from Home Interiors LLC. The two accounts affected by this transaction are furniture account and Home Interior LLC account. Under modern classification of accounts, furniture is an asset. An asset account is debited when asset value increases. Home Interior LLC supplier of furniture is a liability account, and the liability account is credited when liability increases. Therefore, this transaction is recorded for $5,000 by debiting asset account and crediting Home Interior LLC creditor account. Transaction T25 is business purchased goods worth $10,000 in cash. The two accounts which are affected are purchase account and cash account. Purchase is an expense account. As per expense account rule, expense account is debited when expenses increases. Cash is an asset account, and as per asset account rule, assets are credited when the assets decrease. Therefore, this transaction is recorded for $10,000 by debiting purchase account and crediting cash account. Next illustration on your screen is analyze the transaction, state the nature of accounts and the accounts which will be credited and debited as per modern classification of accounts. Transaction T26 is goods worth $25,000 purchased from Guli Trading LLC. The two accounts which are affected are purchase account and the creditor account of Guli Trading LLC. Under the modern classification of accounts, purchase is an expense account. The rule of debiting the expense account is debit when the expenses increase. Creditor account of Guli Trading LLC is a liability account, and the rule for crediting a liability account is credit the liability account when it increases. Therefore, this transaction is recorded for $25,000 by debiting the purchase account and crediting the Guli Trading LLC account. Transaction T27 is goods worth $12,000 sold to Tolly for cash. The two accounts which are getting affected are cash account and sales account. Cash is an asset account. Asset account is debited when the asset value increases. Sales is a revenue account, and the rule for crediting revenue account is credit revenue accounts when revenue increases. Therefore, this transaction is recorded for $12,000 by debiting the cash and crediting the sales account. The transaction T28 is goods for $25,000 sold to Molly. The two accounts affected by this transaction are debtors account of Molly and sales account. Molly's debtor account is an asset account, and the rule for debiting an asset account is debit assets when the asset increases. Sales is a revenue account, and the rule for crediting a revenue account is credit revenue when revenue increases. Therefore, this transaction is recorded for $25,000 by debiting the Molly's account and crediting the sales account. Another illustration on your screens is analyze the transactions, state the nature of accounts and account that will be debited and credited as per modern classification of accounts. Transaction T29 on your screens is cash amounting to $20,000 received from Molly. The two accounts which are affected are cash account and Molly's debtor account. Both cash and Molly's debtor account are asset accounts under modern classification of accounts. The rule of debit and credit for asset account is debit when the asset increases and credit when the asset decreases. Therefore, this transaction is recorded for $20,000 by debiting cash account and crediting Molly's debtor account. Transaction T30 is a check of $25,000 is paid to Goli Trading LLC. The two accounts which are affected by this transaction are creditors account of Goli Trading LLC and bank account. Goli Trading LLC creditor account is a liability account. The rule for debiting liability account is debit the liability account when it decreases. Bank account is an asset account, and the rule for crediting an asset account is credit assets when it decreases. Therefore, this transaction is recorded for $25,000 by debiting Goli Trading Creditors account and crediting bank account. Transaction T31 is interest on loan amounting to $500 paid to Molly in cash. The two accounts affected by this transaction are interest paid account and cash account under modern classification of accounts. Interest paid is an expense account. The rule for expense account is debited when expenses increase. Cash is an asset account, and the rule for crediting asset account is credit assets when the asset value decreases. Therefore, this transaction is recorded for $500 by debiting interest paid account and crediting cash account. Another illustration for journal entries on your screens is past journal entries for below mentioned transactions. Transaction T32 is goods returned to Goli Trading LLC worth $2,000. The two accounts which are affected by this transaction are creditors account of Goli Trading LLC and purchase return account. Under traditional classification of accounts, Goli Trading LLC is a personal account, and the rule of debiting personal account is debit the receiver. Purchase return account is an income account for accounting purpose because purchase is an expense account. The rule of crediting an income account is credit all incomes and gains. Therefore, this transaction is recorded for $2,000 by debiting Goli Trading LLC account and crediting purchase return account. Transaction T33 is goods sold returned by Molly valuing $1,000. The two accounts affected are sales return account and the debtors account of Molly. Sales is a revenue of the business, and the sales return is considered as the expense for the purpose of recording sales return transaction. Rule for debiting an expense account is debit all expenses and losses. Molly's debtor account is a personal account, and the rule for personal account is credit the giver. Therefore, this transaction is recorded for $1,000 by debiting sales return account and crediting Molly's debtor account. Sales and purchase of business are always shown as net of sales return and purchase returns respectively in the profit and loss account. Transaction T34 is salary amounting to $12,000 paid in cash. The two accounts affected are salary account and cash account. Salary is an expense account, and the rule for expense account is debit all expenses and losses. Cash is a real account, and the rule for real account is credit what goes out. Therefore, this transaction is recorded for $12,000 by debiting salary account and crediting cash account. Another illustration on your screen is past journal entries for the below mentioned business transactions. Transaction T35 is $750 is paid as office electricity expense for the month of June 24. The two accounts affected are electricity expense and cash account. Electricity expense, being a business expense, is debited as per the nominal account rule of debit all expenses and losses. Cash is a real account, and the rule of real account is credit what goes out. Therefore, this transaction is recorded for $750 by debiting electricity expenses and crediting cash account. Transaction T36 is $1,250 are withdrawn for personal use. The two accounts affected by this transaction are drawings account and cash account. Drawings account is a personal account. Therefore, as per the rule of personal account, receiver account is always debited. Cash is a real account, and the rule for real account is credit what goes out. Therefore, this transaction is recorded for $1,250 by debiting drawings account and crediting cash account. Transaction T37 is advance rent for 3 months amounting to $3,000 paid. The two accounts affected are prepaid rent account and cash account. Prepaid rent account is a representative personal account, and for personal account, the rule is debit the receiver. Cash is a real account, and the rule for real account is credit what goes out. Therefore, this transaction is recorded for $3,000 by debiting prepaid rent account and crediting cash account. Another illustration on your screen is past journal entries for the below mentioned business transactions. Transaction T38 is sales manager Mr. Rowley's business tour expense of $750 settled for cash. The two accounts affected are travel expense account and cash account. Travel expense of sales manager being the business expense is debited as per the nominal account rule of debit all expenses and losses. Cash is a real account, and the rule for real account is credit what goes out. Therefore, this transaction is recorded for $750 by debiting the traveling expense account and crediting the cash account. Transaction T39 is an advance check of $25,000 paid to TPL LLC for the purchase of machinery. The two accounts which are affected are the advance for machinery account and bank account. Advance for machinery account is a representative personal account, and the rule for personal account is debit the receiver. Bank account is also a personal account, and the rule for crediting a personal account is credit the giver. Therefore, this transaction is recorded for $25,000 by debiting the advance for machinery account and crediting the bank account. Transaction T40 is a check of $7,000 is issued to AB LLC in settlement of their total outstanding amount of $7,500. The accounts affected by this transaction are AB LLC account, bank account, and the discount received account. AB LLC is a personal account. Rule for debiting a personal account is debit the receiver. Bank is again a personal account, and the rule for crediting a personal account is credit the giver. Discount received is a nominal account, and the rule for crediting a nominal account is credit all incomes and gains. Therefore, this transaction is recorded for $7,500 by debiting AB LLC account by $7,500, crediting bank account by $7,000, and crediting discount received account by $500. Another illustration on your screen is past journal entries for the below mentioned business transactions. Transaction T41 is office telephone bill for $500 for the month of September 24 paid in cash. The two accounts which are affected are telephone expense account and cash account. Telephone expense being the business expense is debited as per nominal account rule of debit all expenses and losses. Cash is a real account, and the rule of real account is credit what goes out. Therefore, this transaction is recorded for $500 by debiting telephone expenses account and crediting cash account. Transaction T42 is goods costing $1,250 distributed as samples. Distribution of goods as samples means it is not a sale. They are distributed free of cost as samples to promote sales. The two accounts which are affected are sample account and purchase account. Donation of goods being the business expense is debited as per nominal account rule of debit all expenses and losses. Since distribution of samples is not a sale, it will be credited to the purchase account as the stock of the goods will reduce. Therefore, this transaction is recorded for $1,250 by debiting sample account and crediting purchase account. Transaction T43 is a check of $19,500 is received from Polly to settle his outstanding amount of $20,000. The accounts which are getting affected by this transaction are bank account, discount given account, and Polly's account. Bank is a personal account, and the personal account rule is debit the receiver. Discount given being the business expense is debited as per nominal account rule of debit all expenses and losses. Polly's account is a personal account, and personal account rule is credit the giver. Therefore, This transaction is recorded for $20,000 by debiting bank account by $19,500, discount given account by $500, and crediting Polly's account by $20,000. Transaction T44 is cartridge of $100 paid for goods purchased. The accounts which are affected by this transaction are carriage inward account and cash account. Carriage inward being the business expense is debited as per nominal account rule of debit all expenses and losses. Cash is a real account and the rule of real account is credit what goes out. Therefore, this transaction is recorded for $100 by debiting carriage inward account and crediting cash account. Transaction T45 is purchase of stationery for cash. The two accounts affected are stationery account and cash account. Stationery being the business expense is debited as per nominal account rule of debit all expenses and losses. Cash is a real account and the rule of real account is credit what goes out. Therefore, this transaction is recorded for $250 by debiting stationery account and crediting cash account. Transaction T46 is $150 is paid for the office repair. The two accounts which are affected are repair account and cash account. Repair being the business expense is debited as per nominal account rule of debit all expenses and losses. Cash is a real account and the rule of real account is credit what goes out. Therefore, this transaction is recorded for $150 by debiting repairs account and crediting cash account. Let us understand the accounting of trade discount. A trade discount is not recorded in the books of accounts separately. Sales is recorded at net of trade discount by the seller. The purchaser also records purchases net of trade discount. For example, Polly sells goods to Molly worth $100,000 at a trade discount of 20%. Let us analyze this business transaction. Gross price of the transaction is $100,000 less 20% trade discount amounting to $20,000. That will give us the sales value of $80,000. The journal entry in the books of Polly, the seller, will be recorded as appearing on your screen. The two accounts which are affected are Molly's debtors account and sales account. Molly's account is a personal account and for personal account the rule is debit the receiver. Sales is a revenue account and for revenue account the rule is credit all incomes and gains. Therefore, this transaction is recorded for $80,000 which is net of the trade discount allowed amounting to $20,000. Similarly, an entry will be recorded in the books of the purchaser Molly also for $80,000 as appearing on your screen. The two accounts which are affected are purchase account and Polly's creditor account. This transaction is passed by debiting the purchase account and crediting the Polly's creditor account with a net value of the purchase of $80,000. Let us now learn about cash discount. A cash discount is a reduction in the invoice amount offered to customers for paying their bills within a specified period. It is an incentive for early payment and it also improves cash flow of the seller. Cash discount is often allowed to encourage prompt payment and reduce the risk of late or unpaid invoices. Cash discount is allowed after allowing trade discount from the customer invoice. Let us further understand the concept of cash discount with an example displayed. Polly sells goods to Molly worth $100,000, allowing him a trade discount of 10% and a cash discount of 5%. Now, if we analyze this transaction, the list price or the gross price of the transaction is $100,000. Reduce the trade discount of 10% which amounts to $10,000. Sales value post trade discount is $90,000. Seller has allowed a cash discount of 5% to the buyer which amounts to $4,500. The cash discount is allowed on the sales value of $90,000. Now for this transaction,
$85,500 will be paid by the buyer to the seller. Please note that cash discount is always allowed on the receipt of amount either by cash or check. Cash discount is an expense for the seller allowing it, and it is an income or gain for the buyer. Let us learn the accounting entry for cash discount first in the books of Polly the seller. The entry will be recorded as appearing on your screen. Molly's debtor account is a personal account and will be debited by applying the rule of debit the receiver. Sales account is a nominal account and will be credited by applying the rule credit all incomes and gains. Therefore, this transaction will be recorded net of trade discount with a value of $90,000 by debiting Molly's debtor account and crediting sales account. Please note that no separate entry for the trade discount of the value $10,000 will be passed. Let us now learn how the cash discount is accounted. In the given transaction, 5% cash discount is allowed, which amounts to $4,500, which means the seller Polly will receive $85,500 to settle the transaction of the value $90,000. The three accounts which are affected by this transaction are bank account, discount allowed account, and Molly's debtor account. Bank account is a personal account, therefore, under the rule of debit the receiver, it will be debited with the actual received amount of 85,500. Discount allowed being business expense will be debited with the amount of cash discount of $4,500 allowed. Molly's debtor account is a personal account and will be credited with the amount of transaction value of $90,000 settled and is credited under the rule credit the giver. Let us learn the accounting entry of cash discount in the books of Molly the purchaser. The entry will be recorded as appearing on your screen. Purchase account will be debited as purchase is an expense and as per expense rule debit all expenses and losses. While Polly's account is a personal account and as per rule of personal account credit the giver. Therefore, this transaction will be recorded for $90,000. No entry for trade discount of $10,000 will be recorded. Let us now learn how cash discount is accounted in the books of the purchaser. In the given transaction, Molly the purchaser has got 5% cash discount amounting to $4,500, which means Molly the purchaser has to pay $85,500 to the seller. Three accounts which are getting affected are Polly's creditor account, discount received account, and bank account. Polly's creditor account is a personal account and will be debited with the amount of the transaction settled for the value of $90,000. Discount received being business income will be credited with the amount of the cash discount of $4,500. Bank account is a personal account, therefore under the rule of credit the giver, it will be credited with the actual amount of $85,500 paid. In my upcoming video of part 7 in the series of 100 plus journal entries on 19th of April, we will cover a wide range of practical accounting entries from rebates, discounts and banking transactions to special cases like bad debts, insurance claims and drawings. If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel at the rate Accounting Buddy. Thank you and goodbye for now.